Hey traders, Mike Sir here. Welcome back to my channel. In profiling many incredibly successful traders, it's not often that I come across an everyday regular guy who managed to turn $20,000 of his own money into well over $42 million in the stock market. Now this type of success gives a lot of traders hope that you too can one day, with the right knowledge, strategy, and mindset, be able to do the same. So in this video, I'm going to share his unique trading philosophy that I think anyone can follow. Stay tuned till the end of the video as I will show you real-life examples of trades that he profited immensely from. The trader I'm referring to is Chris Camillo. Chris is an amazing trader success story as he had no prior background in the financial markets when he started investing his initial $20,000 into the stock market back in 2007. In fact, he did not know much about the stock market, but he used the things that he saw during his day-to-day life to spot trends and trading opportunities. But there was one skill that he had developed ever since he was 13 years old, and it was the ability to spot arbitrage opportunities. He had the natural ability to spot undervalued and underpriced items and being able to flip them or sell them at a substantial profit. Now this started when he was a kid, buying items at garage sales for pennies on the dollar and flipping them for 10 times profit. So when the financial crisis hit in 2007-2008, he wasn't aware that he started applying his arbitrage skills to the test. He opened a trading account and deposited $20,000 into it, hoping that he can generate some steady returns in the stock market. Little did he imagine that $20,000 would turn into $2 million in just under 3 years. Now with that type of success, he proceeded to quit his job and focus all his attention on trading the stock market. His focus paid off by 2017, a little under 10 years since he started investing in the stock market. He managed to turn his nest egg into over $10 million, a very impressive feat. One of the main reasons for his success was a concept called social arbitrage trading. It's a technique that looks for hot trending topics to identify price impacting information and utilize that information before the market factors or prices it in. And this was why in 2015, Chris launched a social data intelligence tool called Ticker Tags. It's a social listing platform that collects data off of social media platforms like Twitter or Facebook and utilizes that data to produce meaningful insights about the latest events. It was an extremely valuable tool for traders like Chris because it gave him the ability to monitor conversations around keywords pertinent to publicly traded stocks and help identify trading opportunities. By observing what was discussed on platforms such as TikTok, Twitter, Facebook, and Instagram, they were able to buy early into specific stocks before the general investing public bid the prices of these stocks higher. Now later in the video, I'm going to go into examples of the trades that Chris profited handsomely from due to his social data tool. By 2020, Chris continued to grow his account and doubled it to over $21 million. And by May 2021 of last year, he doubled his cumulative profits again to over $42 million. He mentioned it in one of his interviews that if he had actually taken out any of his profits from his trading account, he would have had a $100 million trading portfolio. Chris's trading style is unique to other traders as he doesn't immerse himself in the finances of a company or rely solely on the technical charts. What he has realized is that while the general public will look to corporate earnings growth, company news announcements, or Wall Street analysts to decide where to put their money, by the time the information arrives on Wall Street, it's just too late. The stock prices of these companies may have already gone up. But in utilizing his social data intelligence tool, he gets in on the ground floor where there is chatter about a specific product or company. Now, timing is key, and buying before Wall Street realizes the opportunity is where Chris earns the majority of his profits. In addition, Chris incorporates things that he sees in his day-to-day life that have potentially game-changing impacts on companies to his trading ideas. So for example, back in 2011, his wife had told him that the big box department store Target going to do a collaboration with Italian luxury fashion house Missoni. This partnership would allow regular fashionistas to get their hands on luxury goods without breaking the bank. On the day of the Missoni release, Chris was in a line of 150 people at the Target store with his wife, and within 2 hours, every piece was sold out. Within minutes, Chris was able to verify that it appeared that every Target store in the country has sold out of Missoni, and that the target's website had crashed due to the intense demand. Upon realizing this game-changing information that he had in his hands that Wall Street had not picked up on yet, he initiated a trade immediately on that day by buying target call option contracts, and within 48 hours, Chris had almost tripled his money. This type of trading strategy is referred to as information arbitrage over Wall Street. When Chris spots these types of opportunities, he first of all verifies if the information is already in the public domain. If it isn't yet, then he invests aggressively, and when the financial media starts talking about the trend that he spotted, he knows it's time to get out. Let me share more examples of trades that Chris profited from utilizing his trading strategy. In 2016, Chris knows the social media buzz around the Pokemon Go game before it's released. He analyzed the data surrounding the intense anticipation amongst the public for the game and forecasted that it would be a blockbuster success. As a result, Chris predicted that the Nintendo company stock would double in value, and he was right. You can see from the chart of Nintendo that the stock went from $18 in July 2016 to over $36 in a matter of 8 trading days. In March 2019, beauty YouTuber Jeffree Star, with over 60 million subscribers, reviewed e.l.f. Beauty's makeup product Camo Concealer. Now, this video was a huge success as it garnered over 14 million views and brought the company e.l.f. to the forefront in consumers' eyes. Now, Chris analyzed the social media data and knows that the video inspired many millennials to purchase the product. Chris took action and acquired both company shares and call options of the cosmetic company. And you can see from this chart that the YouTuber review of their products was a significant turning point for e.l.f. Beauty. Between March to August 2019, the stock more than doubled from $8 to $19 per share. When the pandemic struck in the spring of 2020, many shopping malls, theaters, restaurants, and gyms in the United States closed. Now, Chris knows a huge amount of social media conversation and interest in anything outdoors, like riding a bike or buying a boat. Now, this is when he realized that the bicycle and boat makers were going to see an increase in demand like never before in the history of these companies. One company he focused on was Doral Industries, which is the parent company of major bicycle makers, including Schwinn and Cannondale. He bought shares on April 24, 2020 at $1.56, and as the information that he traded on became widely known, he gradually sold his shares and took some profits in June when the stock was close to $4.46. And he finally sold off his entire position in November when the price climbed to $11.38, a 629% increase. Not all of the trades that Chris put on due to his social arbitrage trading strategy worked. In fact, one of his biggest losses was a $750,000 loss in 2019 when he bought shares in fast food chain operator Restaurant Brands International. The company owned brands such as Burger King, Popeyes, and Tim Hortons. He was betting on the launch of two much anticipated products, which was Burger King's Impossible Whopper and Popeyes Chicken Sandwich. Now, the two products did extremely well, but the company Tim Hortons had one of the worst quarters in its history that dragged down the price of Restaurant Brands' stock. Chris had bought shares in April and again in August 2019, but the price peaked at $78.45 in August, only to see it collapse 59% in March 2020. The lesson Chris learned was if he invested into a company, he needed to understand the entire company. Now, he had a high degree of confidence in product launches, but he just didn't look into enough the social data of Tim Hortons. Thanks for watching. If you like this video about Chris Camillo and about his social arbitrage trading strategy, please smash that like button and comment below on what trending ideas have you spotted for 2022. I'll see you guys in the next video.